Hey friends, Scott Smith again with the Smith team at Keller Williams, coming to you with part two of how to win with multiple offers. The first part, we talked about just different strategies and what we're seeing in the market, especially with first-time buyers. Whenever we're out there working with any buyers, we're looking at a couple things that make a property stand out and getting up to speed with the market. And how do we know if it's property is going to be selling in multiple offers? That's really just a good understanding and experience when it comes to knowing the market, knowing the supply and demand trends, and also just looking for clues and having good communication with those listing agents. So when we're out there with our buyers, we want to make sure that they are up to speed on what's going on in the market, and then also have a good insight on the values that we're looking at for properties. Believe it or not, there's some agents that don't have a handle on it. They're part-time agents. Maybe they're not working in an area that they feel comfortable with or a price point that they're not comfortable with, and they decide that they're going to list the property just based on some algorithm that spit out from the MLS. And it might be, maybe it's 25, 30, $50,000 below what the market would bear in today's market. Or maybe they're trying to generate multiple offers. There's also some agents that might have overpriced a property. So it's really important to have a good understanding of what the market conditions would bear and being up to speed with that. So as we're guiding our buyers through the process, helping them navigate that we feel that we're getting a good value, whether we're getting a transaction that's paying full price, maybe a little bit under, or in this case, we're talking about multiple offers. So the two things I talked about last week were the price and the timing. Give you some good strategies that we've used and for our clients to help them win with multiple offers. The next thing I want to share with you is the terms of the offer, and that relates to the type of financing or how you're purchasing the property. Not all buyers have cash, and they are taking out a mortgage for the property. So first and foremost, making sure that you've got a good local reputable lender that's giving you sound advice for a solid mortgage transaction, and making sure that those financing numbers and the pre-approval stands up. So that is very, very important, having a clean pre-approval letter. Some lenders will actually help with that process, and they can do what's called a desktop underwriting and have that the buyer's qualifications all ready to go. So all we got to do is find a property, and there's no loose ends with that. There's a big difference between a pre-approval and a pre-qualification letter, and certainly makes a difference when you're presenting an offer. The next thing I want to talk about is seller concessions, and that is if you're a first-time buyer, asking the seller to pay closing costs. That basically impacts their bottom line. So you might be writing a full-price offer, but ask for $5,000 towards your closing costs because maybe you don't have enough in your savings to bridge the gap for that. You've got enough for down payment, but maybe not the lender closing costs. So what we would maybe look at doing is building those on top of your offer so it doesn't impact the seller's bottom line. So it's a net wash for them. So let's use a $450,000 property as an example. You need $5,000 in closing costs. We can offer full price, and with the $5,000 in closing costs, and that's a seller a $445 offer. They might counter back and raise the sale price by $5,000 to $455. Basically, you're getting your seller pay closing costs. We're building into the purchase price, and the seller walks away with the net that they're looking for. Another big component when you're financing and you're competing with multiple offers is an appraisal gap. And what that means is when the bank comes in to appraise the property, we want to make sure that it appraises for the sales price. If we're offering well above asking price and that property does not appraise for the sale price, we've got to figure out a way to bridge the gap up to a certain amount. So every offer with financing, you've got a financing contingency. So in the example I was just talking about, the $450,000 property, let's say if we offered $460, but the property didn't appraise for that, it only appraised for $450. Maybe the appraiser was just felt comfortable with their numbers and they weren't going to budge at all. So we've got to figure out how to bridge that $10,000 gap. If the buyers have the financing ability, we can structure it so that there's an appraisal clause, and like in this case, up to $10,000 to bridge the gap. If we don't have that, it kind of goes back to the drawing board for negotiations with the seller. Unfortunately, you might end up losing the deal if you can't bridge the gap and the seller's not willing to budge. So the financing terms certainly make a big difference on how you're presenting your offer and how much it stands out. The down payment is another another component of that, and how much down payment you have. If the more is definitely better. Obviously, cash is king when it comes to that, but sometimes those financed offers will stand above the next highest cash offer. The last thing I want to share with you is the contingencies, and I'm not going to touch on a home sale contingency. I'm more so focused on the inspection contingency. With some cases, depending on the price and condition of the property, if it's a multiple offer, usually that's in great condition. And the buyer might look at waiving their home inspection contingency. And that's certainly on a case by case basis and a client by client basis. We look at that. We want to make sure our buyers feel comfortable with what they're getting into. And when the market was crazy a few years ago, buyers left and right were waiving inspection contingencies, and they're finding out the hard way some of those things were overlooked. So there's different ways that we can have that. We can actually have the property kind of a short and sweet inspection before we actually submit our offer if we've got enough time to do that. So it's a good idea, a good resource to have those inspectors lined up and ready to go, so they can do a quick walkthrough and see if there's anything glaring that we would maybe want to address within our offer, or might be a concern as we're moving forward. Some buyers, if it's a good property, we might waive our home inspection contingency. With that, you're basically buying it, and what you see is what you get. You don't have any of that liability or ability to go back to that seller and say, hey, you should have told us about this. You waived your inspection, so you're kind of SOL when it comes to that. Another resource we've done with our buyers is doing a pass-fail home inspection. And then what that means is that we're going to basically do our inspection within the shortened time frame. And with that, we're going to either accept it as is, or we're just going to walk away. And that's gives a seller peace of mind a little bit to say, hey, you're not going to be coming back to me and asking for any discounts or concessions with the home inspection findings. You're just going to either take it or you're going to leave it. So that can help your offer stand out as well. So there's 4 different things I've shared with you over the last couple of videos: the price that you're going to offer the property and how you're going to structure that, the timing and closing and possession, the terms, how your mortgage finance or your cash financing, making it clean as possible with maybe an appraisal gap clause in there, and lastly, the home inspection as it relates to your any contingencies with that. Certainly reach out to us. We'd love to help you help navigate the crazy real estate market that we're in. If you found this video helpful, certainly like it, share it, and pass it along to someone that's maybe looking to get into their next home and make a move in 2026. Reach out to us at 651-777-3434. Find us online, send us a direct message, figure out a way to connect with us. We're happy to help. Thanks. Have a great day. Take care.